Welcome to Market Talk. I'm Amber Lancaster here with Paul Mampilly. Today's update is for the week of June 8th, 2020. I'll begin with the latest economic overview, my innovation story of the week, and of course, developments in America 2.0. So let's begin. We are currently witnessing a rebound in U.S. unemployment numbers as states begin to reopen. So since Friday's jobs report, the stock market continues to tick higher as the May unemployment rate actually reported a better than expected number, falling to an unadjusted 13.3%, adjusted 16.4% versus a forecast of a major drop of 19%. So in all, as this chart shows, May saw the largest jobs increase ever, topping 2.5 million. And per Bloomberg data, quote, the data suggests that the economy may be picking up faster than expected from the pandemic's fallout, end quote. And moreover, as this next graphic shows you, Bloomberg and LPL are also reporting that, quote, the S&P 500 index's biggest ever gain over the past 50 trading days offers a reason to think that stock prices may be even higher this time next year. And as this comparative return chart shows, the index rose for 50 days as of this past Friday by 43%, the most since it was restructured to include 500 companies in 1957, according to data compiled by Bloomberg. Now, peak gains of more than 20% occurred 7 times between 1975 and 2009, and the S&P 500 moved higher each time over the next 12 months, and the average advance was 17%, end quote. And I must note that these positive stats are not a surprise to our Bold Profits Strong Hands Nation family, as seen in this NASDAQ chart. It shows our Bold Profits Daily published alerts. And if you've been a Bold Profits reader and Paul Mampilly YouTube channel subscriber, especially since the start of the unprecedented health crisis, you could note that Paul and the team aim to alert readers and watchers that we would see a V-shaped recovery in the stock market, and in particular, the New World America 2.0 stock arena. So the first of these rebound alerts went out on March 18th, 5 days before the market bottom, and our Bold Profits Daily free e-letter that's chock full of wonderful information. And this article titled COVID-19 Market Rebound Stocks to Buy at Rock Bottom Prices went out at that time. So I have a question to our Strong Hands family watching now. Did you scoop up stocks around the market bottom and ride the V-rocket recovery over the past several weeks and realize gains? We would love to know, because it's tenacious Main Street investors just like you whom Paul and the team want to help most of all. So where U.S. economic releases are concerned, there are 7 major releases this week. On Tuesday, April, and we'll have the April final print for wholesale inventories month over month. That will post at 10 a.m. On Wednesday, MBA mortgage apps, May's consumer price index month over month, and the Federal Open Markets Committee FOMC rate decision will post at 7 a.m., 8:30 a.m., and 2 p.m. respectively. On Thursday, May's PPI final demand month over month and initial jobless claims will post at 8:30 a.m. And on Friday, June's preliminary University of Michigan sentiment number, well, that will post at 10 a.m. And now for my innovation story of the week, which is all about the coming smart city and the electric vehicle EV revolution. So nextweb.com is reporting that the state of Ohio's government is helping its residents switch to EVs, cutting 1,850 tons of carbon dioxide. Quote, the electrification program developed after Smart Columbus, a public-private smart city initiative led by the City of Columbus and Regional Business Coalition Columbus Partnership. Well, they were awarded a $10 million grant as part of the innovation grants it received as a winner of the U.S. Department of Transportation's first ever Smart City Challenge back in 2016. So at the time, just 0.4% of vehicles sold in the Columbus region were battery EVs or plug-in hybrid EVs. Well, this has now reached over 1.8%, but what's better to hear is new figures show that over 3,300 EVs were sold in Columbus, Ohio over the past 3 years, exceeding the target of 3,200, and that consumer likelihood to purchase an EV also grew by more than 20%, end quote. And finally, in our America 2.0 update, a Realtor magazine is reporting that home list prices have hit a new high as inventory shortages abound. Per the May housing report from Realtor.com, quote, the housing market started showing signs of strengthening in May as states started to reopen after being locked down. So more listings are coming on the market and home prices are standing firm. And May's home price data demonstrate that the underlying strength of the U.S. housing market, despite the challenges brought by the health crisis. Realtors.com chief economist states the following, that the fact that home prices are at an all-time high shows that the momentum that the market had prior to the pandemic has helped keep buyer and seller expectations stable, end quote. So that's very good news indeed. So Paul, that's it for me this week. Please share what's on your mind.
Thank you, Amber. And I love the brush and the blue, and I'm kind of matching today.
You are.
Love the news about housing and love the news about jobs. And we have to warn people, Amber, which is that it's beyond even really like the gloom and doom media. Even on most of YouTube finance media, these folks are just filled with grim tidings. And I would tell you that please dismiss the stuff that people are talking about, the jobs report having some problem with it. There's no problem in it. It's really simply reflecting the underlying growth potential that's there, that's been there in the economy, which is very much all America 2.0. And as Amber has noted, we have noted that there's always been an underlying strength in the housing market, even through the crisis. In other words, the buyers never really went away. They always showed signs that they were there, whether it be through virtual seeings or just by any number of companies like Zillow and Redfin, or even DocuSign indicating that there was a backlog of closings that were mounting, that were going to happen once it happened. So as everyone knows, America 2.0 is really about three things. And Amber touched on all parts of it, which is that it's driven by a stacking of enormous, incredible technologies, mega trends that can really affect every part of life. And you referred to one of those, smart cities. I mean, that's an essence of implementation of Internet of Things, artificial intelligence, in time blockchain. Then it's about the millennial generation coming of age, their incomes rising through time. And the greatest expression of that really is the housing market.
Yes.
They are now the majority buyer in the United States of houses. And on our team ourselves, I know that at least one person on our team went and bought a house during the crisis. And it was just an example of what was going on. In fact, some of my friends are real estate developers, and they have been telling me through the crisis, just the buyers are still out there. And when I go around my area, housing activity continued, even through the crisis. And the last thing, Amber, that America 2.0 is about is we call it economic velocity. And this is something that the crisis has really done. In other words, we finally got it right in terms of what our policy should have been from the government. Like, it's about 12 years too late. However, nonetheless, this is everything we should have done in 2008. However, we probably never had the sort of political will or desire to do it, or maybe we didn't know what to do. In other words, get money to the people. That's what the government should have done. So we sent $1,200 to pretty much everyone. And then secondarily, the Federal Reserve finally, Amber, did what it should have done. In other words, it acted fast, it acted with urgency, and it acted with massive force. And I believe that has really locked into place all three elements of America 2.0. And one of the ways that I would tell you that you can benefit because this is a Main Street bull market, Amber, a Main Street bull market. This is one of the greatest things that really brings a smile to my face, which is that the big investors are a little bit locked out. They're a little bit locked out because some of these companies are too small for them. They have way too much money. And so they're going to have to be forced to sit down while we, Main Street, regular investors, mom and pop investors, retail investors, whatever you want to call us, I just call us regular American investors. We get to go in and benefit and get the gains before they come in, and then they can take it to the next leg even higher and skyrocket these stocks. And one of the best ways you can do it is by getting in on the smallest stocks that are out there. And we have a service specifically dedicated to it. It's called the 100X Club. And if you want to check out my presentation telling you all about the 100X Club, click on the strong hands above, and that's going to take you to a presentation. I'll tell you about this extraordinary, incredible, and I believe once in a lifetime opportunity. Because it comes after an enormous bear market in innovation stocks, after obviously the 2008 crisis, so many different events that have made these stocks dirt cheap. However, they're also a coiled spring that as any money comes in, they rocket these stocks higher. We've already have multiple 100% winners, and we've just started the service, I believe, just a little over a month ago. So I believe it's an extraordinary service for an extraordinary time. And I have to, once again, tell people, you know what I'm going to say, Amber?
Yes.
BOP, bullish, optimistic, positive. It's also a chance for you to plug your Twitter account, Amber. You go first.
Oh, yes. I can be found at A Lancaster Guru.
And I am at Mampilly Guru. We want to ask you to subscribe to our YouTube channel, give this video a thumbs up, and comment on Amber's question below. And we'll have another one of these for you next week. With that, back to you, Amber.
Thank you, Paul, and thank you to our viewers, subscribers for tuning in this week. We wish you a wonderful, healthy, safe week ahead. And until next time, everyone, take care.